Welcome, everybody. It's 4:30. It's still 4:30. It's not 4:31. It's not 4:29. Welcome. Today is our monthly PUG meeting. And what does PUG stand for? Persons User Group Meeting. It's just a forum that allows individuals to ask that have questions on any indicator that we've put out, any platform that we have our indicators on, and questions that you could ask at any time. So for those, George, how are you down there? And Bonnie, did Joe come or did he send the better half? Trev's got a question at the top. What's the pink zero line in the advanced trading system mean it's always at zero? In the advanced trading system, it's always at zero. The pink zero line in the advanced trading mean it's always at zero. What's the pink zero line? I'm at a loss of words. I'm not quite sure what the zero, the advance. I need a little bit more specifics if you could, Trev. Good question, though. But before we begin, let's get into a couple little things. Risk trading involves a risk of loss. Please take a second. Next to the volume average, we'll get on that. Now you got me thinking hard. Life isn't supposed to be this hard. It's supposed to be fairly easy. Anyway, we'll get through this in just a second. And let me get we had some other email questions out there. Let's see where we are. I'm going to open up that page, and so hopefully we could see what and answer that question. So if you're here today live, we'll take live questions, and we do have a few of the email questions. All right. Okay. Next to the volume average. All right. Trading involves risk of loss. By the way, two announcements. And this was a question in the other room. I figure we'll get it out of the way right now. Many of you are aware we are having a 2-day full live online. It's live and online. Not so much live, but it is live. For those who want to come that feel comfortable with the Florida, most of the folks here giving the presentation, that would be me, are vaccinated, Johnson & Johnson for the record. And online through via Zoom. So if you're interested in that 2-day seminar, it is available. Just give us a call at the office. Many of you have been asking, what's the story about the VIP files? It was the VIP was something that we, back in the day, and this has been going on for a long time, and we created specific files that were for VIP, and they were on a year annual lease basis. Because of the consolidation of the business, mainly TradeStation, and quite frankly, the real simple truth is I just don't know if I got another indicator that I need that's not that's out there. And we just felt that after listening to a few people, it didn't seem fair that if we're not going to increase and have more indicators, and I don't know what the purpose of having more indicators is, then why are we charging a lease fee? So why not just support the one product? And that's rather than going back, if you didn't have the VIP, we have to support the other product, the lifetime, roll it all in one package. And it's done. And so everyone that is interested with the VIP, which would include the TSI indicator, and we can go over that because we do have a question on the TSI indicator. What it is, it's a multiple time frame indicator that color codes the chart. And then also we have the volume indicator, the high close, low close, doji, and the scans, the trilogy. The list went on and on of all the benefits that we had for the VIP. So with that said, it is, if you're interested in more information about that, it's been sent out by emails. And for more information, just give us a call at the office. The number's right down below. All right. Thank you for allowing me to explain that. And hopefully that is what one of the questions was in the live trading room. All right. Next to volume, you said there's a 0. So are you talking next to volume average? There's a 0. Are you talking about in a column? So in the radar screen, what we have, and by the way, if you don't have the daily high and low close doji, that was a part of the VIP package. So when you get the VIP package, then your daily high and low close doji will populate. And that populates letting you know that it's not happening right now. But like, for example, let's look at basic material ETF, the IYM. It's suggesting that right now, if today was Friday and the market closed right now at 129.22, it's generating not just a weekly buy, PPS buy, but it would also be a bona fide high close doji, and that's why you're getting that blinking. Today we have, for example, low close doji in semi-sector ETF. So if you wanted to, if you were thinking that we're going to break below this strong level of weekly support on the last conditional change right here, and we have room to go down just a little bit, and that's very possible, and you wanted to buy a put option before the close rather than wait till tomorrow's opening, high and low close dojis would give you a warning before the close that we were at a threshold that something is happening. All right. All right. So ironically, I'm not quite sure if there is a 0, it means that something's not functioning, possibly, Trev. So basically, it should be today's volume relative to, and this is something that Trev, we're going to take Trev's question, and then I see Bonnie, and I got an answer for you there, Bonnie. Let's go with, you can change the edit the volume if you want to change the input. For example, if you have this radar screen and you wanted to change that to, I don't know, 20 days, you just change the average length and the alert point, change them both. I always do, both to 20. Now, I'm not going to hit enter. I'm going to cancel because I don't want to find out tomorrow that I'm comparing today's volume with a 20 period, which is almost a month, the average of a month. So when it comes to stocks and a daily chart, I like 10 because that represents like literally 2 weeks of trading, right? 5 business days in a week on average. And so therefore I use 10. If you want to compare it to 3 days, change it to 3. You want to change it to 9 days for whatever reason, go ahead. That's how you do it. Anyway, so in the columns, the next one should be what the current day's range is, what the average true range is. And once again, if I'm using 10 period volume, I'm using a 10 period ATR. I don't use what Wells Wilder created in average true range, was 14 periods. 14 periods he considered to be half a cycle. Well, what's a cycle? The cycle was a month back in the day, 28 days on average in a month. And he was looking at the monthly calendar and not the amount of trading days. I'm considering the trading days, so that's why I don't use 14 as the look back window for my ATR or anything for that matter. Okay. And so the next thing that you would find is the person's market catcher, and that's the PMC. And the PMC indicator gives you what the current, the PMC gives you what the current price is, and this is the moving average level. So if something turned bright blue, for example, XME, metals and mining, the relative strength is saying the PMC indicator turned bright blue today. So it means it turned recently, it turned to outperform relative to the market. What the moving average suggests is it just happened because it's white. When it's green, And let's get this up so we can see this, because this is kind of a good, as we go through the listing of things that are in your radar screen. And if Trev, if you say I don't have the zero that you do, it's something's probably not activated. So bottom line, if the relative strength improves by 1 day, I mean, you don't have time for the average of the moving average. And that's what this is. It's a moving average. So if the moving average is still white, that means it was a 1 day, possibly a 1 day wonder. It's not a strong trend developing. If the moving average turns green, it means it's been more than 1 to 2 days. And so therefore the relative strength is now at least a 2 to 3 day performance in the metal. And that's how to read that. So on your how I use this is simply, I do when I go up and down the scheme of things, if I'm looking for buying opportunity or things that are changing, for example. All right. So here we have, for example, Hecla Mining. It's got red and it's got yellow. What does that signify? Hecla Mining, out of all the metals and the mining stocks, is saying that it's relative to the overall market, it's declining, and it's been declining. And that yellow moving average means it's been weak for some time. It just didn't begin to get weak. So red combined with yellow, if bullish, no bueno. In other words, if you see a stock that you want to buy, and unless you're bottom picking or you're going to cost average in or you're going to want to trade around a long-term position, fine. But if you're looking to buy a stock with improved relative strength, a red PMC reading with a moving average of yellow that's not your time to buy. And that's where we get an idea. Just right now, I could tell you is what stocks are starting to outperform relative to the market. Aneco Eagle Mine, it's at the top of the food chain. It's got the relative strength's been improving. It's been fuchsia for the last week. Volume's been increasing. And then today it finally outperformed the market. But today it hasn't had an outperformance by more than, just today. So the metals and the mining is starting to pick up. And as it's starting to pick up, notice over here in the weekly signal column what's happening. You're starting to get a change of sentiment that it's going to generate a weekly buy signal. So already we're in most of the metals and mining, whether it's Kinross, whether it's, which I think we covered MSCI. Was that last week we covered it? I think it was, right? It wasn't yesterday. It was last week. We noted that at Ring, MSCI, the global miner ETF on gold, was starting to see some relative strength improvement. It was starting to see this fuchsia, and it was in a buy signal. We had a high closed doji. It was starting to break out, and so there it is. That's one of the top sectors that are starting to see improvement, and that's where, if you're looking for buys, you want fuchsia and blue, and you want to start to see the sector go from a daily sell to a daily buy. And then it's really slick when not just one stock, but let's take a look. When multiple stocks in a sector start forming or switching or transforming into weekly buy signals, that's telling you that it's gaining some traction. And then again, how did the market do today? GDX, by the way, GDX was up approximately 1.5% on, look at this. Today's volume was 27 million shares. 10-day average volume is 25. So it had an up day. Was it on a big wide range breakout? Nope. It was within its 10-day average. It just had a really good volume day. It didn't have too big of a breakout. It wasn't like a huge volume day on a wide range day. It wasn't a small volume on a small range day. I can take a look at these numbers and I can train you that all you have to do is say, what was today's volume compared to the last 10 days? What's today's range? What's the average 10-day? And you should be able to say, hey, things are improving and we've got a buy signal. It's bullish. This is starting to pick up momentum. And that's the gist of this radar screen and the and these numbered sequence per the indicator. And the indicator would be the person market catcher relative strength tool. On that note, what stocks would we stay away from? If you're bullish, the last thing you want to do is buy Moderna. It's been in a relative strength debacle since, let's say, September 29th. I must have hit the wrong button, but hopefully we can get that right back. There it is. And many of you are already familiar with my ideals of one of two things that I don't like to do. I don't like to buy markets that are at last conditional change or at double top potential resistance when the relative strength is weakening and the volume is negative. It's not a John Person buy the dip mentality when I see that volume decay and the relative strength weaken and the moving average turn red, right? So dark blue with red moving average means something ain't right, okay? And therefore, that's where, whether it's, if it becomes into a buy signal eventually, that's a different story. We would wait to see if the relative strength would improve and get us back into a decent buy setup. So looking at the radar screen and the person's user group, there's a couple things here that I think are kind of paramount to use and get the best out of the radar screen. Many you guys see a lot of times, I didn't do it today, but many times what I like to do is before the market close, come into the live trading room, I just go up and down the scan, and first thing I do is I just say, what is today's potential high and low close doji? And one of the main reasons there weren't a whole lot of high or in fact low close dojis to really talk about, but plus we were preparing for this right now. As you can see, very few high and low close dojis populated today. Prudential here, it doubled up because I got Prudential there in XLF. So a Prudential twice. So there's some redundancy in my breakdown of my sector and subsector stocks. I might have Amazon in 3 different categories or sectors in listing, so to speak. But anyway, this gives me an idea that, man, if we got an improved relative strength, for example, Splunk, today has a high close doji. If I really liked it and say, did the market move up on decent volume? And the answer is, yeah, look, today we had the range was inside of the last 10-day average range. So it didn't have like an over exaggerated price move. Odds are that stock tomorrow may gap. It may be, if it's pre-market going to open higher and it's right around 155 tomorrow, by the way, might be a good idea. Or better yet, if we had given this information out, this might be a good idea to buy an at the money weekly option if you're looking for the market to gap and go. A lot of times what happens is we get these high closed dojis, and the next day the market gaps higher and you can't buy a dip or you can't get in. You got to buy it right on that open. And some people don't like to buy a higher gap open. And with a high closed doji being warned that, hey, by the way, it's flashing, this would have been one I would have said, hey, by the way, Splunk, it's got better than 10-day or just equal to, it's on good volume. Good volume to me is 80% of its 10-day volume or better. That's when I define good volume. How do I find that information? Right here. I actually use what we created and posted in the room. Okay. So I don't know. I think I went a little too much into what Trev was saying. There's a 0 next to the volume. Maybe it's because something's not operating correctly. Trev, we'll take a look at it with you, I guess, one-to-one. But when it comes to what's the order of sequences, where's the market? What's the net change, terms of percentage? What's the high? What's the low? What's the volume like right now? What's the volume compared to the 10-day average volume? What's the range? Is it excessive or is it muted? Is it under the 10-day average? Okay, like for example, Honeywell, $2.3, it's 3.26, so it's it's about 30% less of its volume. Okay, what's the relative strength? It's improving. Boy, that's interesting. I don't know. I mean, if I would be looking at buying Honeywell right now, but I mean, bottom line, when we look at Honeywell, it's already been in a down sell mode from yesterday, had followed through downside. If this thing flips into a buy, I'd say, hey, that might be worthy of a scraping the bottom, so to speak. Anyway, I think that's one of the best things when you look at the relative strength. You just know if you're looking for buying or selling pressure, that's, how much is the market down, and is it down on heavy volume, and is it a wider range? And in the case of Facebook, for example, this is one I covered today. We've been looking at Facebook to go down, and here it is. And obviously they've had their, I don't think they're down and out by any stretch of the imagination. I think the market got liquidated, and I'm actually intrigued by its pattern. There's two things that it has going for it. There's some strong longer-term support at around 317, and there's higher time frame support right around the lows at around 301. And that would be coincidental of the quarterly support that it's at right this minute today, and then down there the monthly support around 307, and there's as you can see, longer term support right here at that last conditional change from, if I may be so bold to say, April 30th, the low around there 296ish. So 301, 296, longer term support. I would be watchful to see if, so for example, Facebook, how I use the radar screen is simple. Today we had a heavy down day on volume, 31 million shares today versus 22, and that's after it's already had a a serious knockdown over the last 3 weeks, 4 weeks. This has had a heavy knockdown. But look what the chart did today. It had heavier volume and it lifted off the low. So this could have been, with a little gap, this could have been an exhaustion bottom type of pattern. Look at the momentum of price. It's improving. The only thing that's not improving yet is the relative strength. My volume indicator, which is part of the VIP package, which is now no longer a lease fee, is starting to show signs of improvement, because the sell signal today, or the downside action or the negative price action today, was on heavy volume, but it closed greater than the open. It's way off its lows. So for me, this is one that I think that's why we put in the room to be watchful of this, because it is nearing some levels of support. And then, so what we want to see is some follow through, a buy. Another thing, when I posted this in the room today, you may recall I said, look for like a positive pivot. And what that means is if the market is truly going to turn around, the price should be above person's pivots, and person's pivot should start indicating higher red, higher green. That's an indicator change. And where does that show up? Quite frankly, that would show up right here under this daily trend. That daily trend, if that turns from down to up, that means the daily person's pivot went from bearish to bullish. And that's what I'm talking about. And we will talk that out. Okay. So I don't know if that helped everything, at least. Trev, I got your. Double check. It's kind of weird. That's the photo it gave me. That's weird. Interesting. It's not showing me the PNG file. Perfect. I will try to forward that over to and look at that. It didn't come through. Right. All right. So anyway, we'll get to your solution. How's that, Trev? Whatever the issue is, we can solve it for you. All right. Bonnie has a quick question. I understand real estate is tight in the algo room, but any possibility of adding crude oil or a euro chart in place of one of the GBTC charts? That's, we had, Bonnie, the reason GBTC was so wide is we do have real estate to add, and we do have a euro. We had euro, we had pound when we had thought that the pound would outperform relative to the euro, which we were correct, it did. But then it got boring. And then we had crude oil. And when crude oil went sub negative $37 a barrel and the margin rates went like through the roof, and pretty much anyone who was trading crude oil didn't want to trade or couldn't afford, the margin requirement was a little excessive, we eliminated it. I still have all of those models, and it's certainly something that tomorrow in the live trading room, if you say, hey, I'm not the only voice here, I'm woman, hear me roar. I'm forgetting who that song was by, but I am woman. You don't want to hear me singing. Anyway, Bonnie, if we'll it's not that we have to take a vote because, well, it's you guys think it's really a democracy running the trading room, but it's really, it's a one voice type of deal. But no, what we do is I can easily make some real estate. We could put back a crude model. I would just have to double check it. And so, yeah, I could do crude. Absolutely. I think that would be it's worthy of putting crude back at this level. So there it is. So there's your answer. Okay. Helen Reddy, is that correct? I am woman, hear me roar. I don't know if I got that right, but where that came from, out of the depths of the bowels of my brain, I don't have any ideas. All right. Here's an email. I have two questions that I hope you can answer. For existing TS10 VIP users, what would be the one-time cost to convert to VIP? I believe it's like the one-time cost is like, I think $13.49 or $59. I don't have the it's 13 something or other, more as a one-time fee. So it's no more lease fee. Two, will you ever consider developing the opening range? Yes. We never finished it because, well, things took precedence. So that's a great question. What is the opening range indicator? Jeff K says it was Helen Reddy's song. So that means either you Googled me, Jeff, or I'm just dirt old and you do too, and you remember who Helen Reddy was. Oh my God. Here's a trivia question. No, we'll stick at the business. I was going to say, what was the song from Billy Jack? It was kind of very similar singer-songwriter-ish, if you remember that the TV show Billy Jack, or the movie Billy Jack. All right, enough. Don't even entertain that. Some of you guys would be like, "What's person on?" And some of you would be like, "Oh yeah, he needs to retire. He's way too old if he remembers Billy Jack." I'm going to take my left foot and I'm going to hit you on the right side of your cheek. And you know what? There's not a damn thing you're going to be able to do about it. All right. So, Billy Jack. What is the open-close relationship? I have in the past done a lot of studies. And one of my studies back in the old days was this. A close above, below, an opening range that holds in the first 20% of the time frame results in a probability about 67% of the time. So let's say not quite 7 out of 10 times it's accurate. That if in the first 20% time frame, so what is 20% of the time frame? 20% of the time frame on a month is the first, what's 20% of, say, 20 trading days? 4, I give it the 5th trading day. If by the 5th trading day of the month, the market is trading above the open print, the odds are the low of the month is in. If the market in the first 5 trading days, the close is below the monthly opening print, the odds are the high for the month is in. We created this indicator, but somehow it didn't translate correctly. We couldn't, with TradeStation's data, get it together. I didn't abandon it. I still use it, but it's not worthy of having out. So to answer the question, if we had a column, which say we've got room, we could put like right there, we would have OR, like not operating room, but opening range. And if the opening range, it would just be simple. If this is a daily, so again, what are you trying to program? If the interval you're asking for is daily, but you want to find out monthly, there was the issue. It wouldn't be able to be put on that unless you changed your interval from daily to monthly. So we were trying to rebuild the radar screen, and it was just an exorbitant amount of work. And so therefore, I would never abandon it, but I do think it is, I use it. It's a very worthy study. And it gives an odds. And that's why a lot of times, if you realize we have 4 common points of interest in the market: the open, the high, the low, and the close. And what constitutes a green candle? If you think about it, market opened lower here. It's a great conversation, by the way. If the market on a monthly basis or a weekly basis, right? If the market, I'm trying to find that, go back a little bit in history. So if the market opens, trades lower, and then in the first day or second day closes back greater than the weekly open, right? If 20% of 5 is 1, so 1 maybe the second day at the least. If the market opens, trades lower, closes greater than the open, the odds are the low for the week is in. How is that helpful to people? Well, I don't know how high the market might go, but I know that I have a 67% probability if the market opened lower, traded above the first 20% of its time frame. So what's 20% of a week? 1 day. All right, maybe you want to make it 2 days on a Tuesday, but by Monday you open lower, trade higher, and close greater than the open for the week. The odds are the market probed the low of the week and the low is in. We don't know what the high will be, but we know the potential low is in, right? So I got 2 things that I could do for that. I can go long the market and place stops below the low with the assumption the low for the month is in, knowing it's not 100%, so stops are not for sissies in this case, but having that statistical edge. And I know that if maybe perhaps the market's gathering a little bit more momentum day by day, I have at least to stick with that weekly trend. The reverse is obviously true. The market opens lower, trades a little. So it opened here and it did trade a little higher, and then it got slammed again. So markets that on a downtrend, generally speaking, or at least if the market on a weekly candle, if the close is less than the open, it had to start somewhere. There's a little shadow. Opened, it traded higher, and it closes below the open on a weekly basis the first day. Odds are the high for the week is in. And the odds are the low for the week is in when the market opens, trades lower, closes greater back above the open. Odds are the low of the week is in. So those are good statistical odds, and that's what the email is about. With rolling into the VIP, if we continue to try to put that indicator out, that would be about the only indicator that I could think of in my mind right this very second that we would create. And yes, in that case, we would add to the VIP at no extra cost. It's part of the VIP. So that would be one, if that answered the whole question. And it's just how we were programming it to get the various time frames on the platform. We can get an intraday and we can get an end of day, but how are we going to get the weekly and the monthly on the radar screen? That was the deal. We would have to set up maybe a separate page for that. It kind of like what we did with the Tsi indicator, which many of you see in the live trading room. And this is the exact model from the live trading room. So I just did it just for simplistic purposes. So this is pretty much Well, this is the live trading room. This is the trading model that you guys have in the room. This is the algo room. This is the model. Why do I have the TSI up? What is the TSI? Basically, it's a twin system indicator that tells us two higher time frames, or the short-term time frame is in sync with a higher time frame. If the 5, in this case, I believe it's 15 minutes in this model, the 5 and the 15 are both in buy mode, they turn blue. That means if it's blue, that means it's positive and it's going up. And so if you get a buy signal when you're in a blue mode, it's a good thing. Inversely, if you get a red colored candle, that means that the 5 and the 15 minute are back in sell mode sync. And when you get a sell signal, you're going with higher time frame conditions. White means that one's in a buy, one's in a sell, and it's changing. That's what that indicates. So if you're in a solid downtrend, it's red. But if something starts to change, it would turn white. And so that's why you go from a little mini uptrend, something changed, it went white on you here. The model went short at approximately the 1440 time, the 220 to 240 time period. Excuse me, I know the time of day. The 240 time period in the afternoon, and it just exited that position, right? So that's the TSI could be used for like 15 minutes, 60, 560. That would be a little, I don't like that time frame, by the way, for those that use the TSI. I don't like a 5 minute and a 60 because 60-minute range, way too much for a turnaround in this market. A 60 and a daily is a good combination. Maybe the 15-minute and the 60 minutes a good combination. So logically, just think of what you're asking and what you're asking, what you want to know. I want to know are two time frames in sync that have reasonable trends that I can trade around. If a 60-minute bar has a 40-point range and you're a day trader in the E-mini S&Ps and you got to put your stop above or below the high of the day, are you really willing to risk 40 S&P points above a 60-minute high? And the answer is probably not. That's insanity. That's a lot of risk. So moral of the story, be cognizant of the time frames that we're trying to, mesh together that would make sense for a short-term trend. I mean, what is day trading after all? It's short-term trading. So I want to be with the short term. Could you do a 3-minute and a 15-minute? Sure. Could you do a 1 minute and a 5 minute? Yeah. So think of what you're trying to get out of the indicator when you're using the TSI model, and that's part of the VIP package was also that time frame. So we put that with the Bitcoin. So if the market's red and you're looking like, hey, I want to buy this thing, and it's still red, it's probably not a good idea, right? So the next question is, could we? I guess the next statement was, could I change and add and reduce a little bit of real estate on the Bitcoin and throw in a crude oil? And the answer is, yeah, we could easily do that. So that covered what the TSI is. That covers the open close relationship statistic. I think we covered, except for Trev's big question. David says, John, you think singing "I'm Every Woman" by Whitney Houston would be highly as a shout out to your feet? I'm every woman. I didn't realize that was Whitney. You guys are killing me. What did you do, David? Did you look that up online or something? Oh my goodness. All right. So I did have, just in case, this on the VXX model, I also have it there. This is it's a different model than you guys have in the live trading room. This model is a little bit higher time frame. It's a little bit more aggressive. It has a higher holding period. It's got a bigger risk tolerance, which means it's got bigger risk, and it holds winners a lot longer. And as you can see, bigger risk, short with a big old hickey on the risk factor rather than the stop out where it should have been. And if it gaps above the open, then it would have been out, a lot, maybe a little sooner. this particular model is still short. And as you notice, what's interesting about the volatility on the TSI, there's two things that I would illustrate on the VXX using the TSI indicator. This is a 60-minute with a daily. So this says that right now, both the 60-minute is in a PPS sell and the daily is in a PPS sell. Now, that's bizarre considering the fact that the market's in a PPS sell. And so volatility traders aren't buying into this breakdown. There's no volume divergence either. In fact, one of the other weird things is another metrics that I wanted to point out. On the newsletter, if you read the newsletter this week, I said, hey, watch out, volatility still high, meaning average true range is defined by the volatility term. But this is the ATR, 10-period ATR of the VIX. So inversely, when stocks go down, ATR goes up. Inversely, when the volatility VXX goes up, stocks go down. When the VXX goes up, the ATR rises. So I'll repeat all that one more time. When stocks go down, it's usually associated with panic, fury, and you see a rise in ATR levels. The average true range increases. So when you're looking at volatility, which is a measure of that, say panic, all right? When you're looking at that, if the volatility, the VXX going up, it signifies that the stock market's going down. So therefore, when this is going up, it's going up in a panic, and that's why you see a rise in the ATR. Now, this should be, and I want to reemphasize, should be inverse to the S&P's performance. You would say, John, the VIX today is down 20 cents. It's down 0.8%. Shouldn't the S&Ps have been up today? Why is the VXX down and the S&P's down? And today I don't have that answer. What it suggests is that nobody in how this is priced was buying VIX futures in the first two forward contract months. And the volatility, people just don't believe, and no one wants to take a position in the volatility thinking there's a big crash coming. Because if they did, they would not be, this would not be in a sell mode. It would be more like in a state of blue. It would be in a state of white changing, right? But it is clearly in a red downtrend right now, which is bizarre. And the volatility is not pointing up. It's actually pointing down. So today, even today, the volatility ATR of the VXX is down. This is not a normal association. So there's a couple things when you use the TSI, you can say, well, maybe one time frame's up and one time frame down. And that's where this is kind of helpful. Now, it's not a guarantee that every time. Here's a time where the market the volatility was, as you can see, both time frames were in sell mode. This would have been on September 27th. And in that case, what was going on September 27th? Well, on the close, the volatility ATR upticked. Here, the volatility downticking. So, I mean, I've got two different ways of looking at the market. There's no volume suggesting that this thing's getting ready to rock and roll, right? I mean, even the on-balance volume was making in this period right here. And I just want to make sure that you see it. I'm comparing an apple to an apple. The TSI was solidly red, which reflects on this particular trading session, September 27th, that both the 60-minute and the daily were in sell mode. But there was something questionable at 15:30, that's 3:30, when the bar closed. What was happening with the on-balance volume? It was actually going up, not down. What was happening to the volatility of the ATR? It was starting to show some weirdness, and it was starting to rise. What's going on today? Totally opposite. Everything is in sync, which shows a reflection of a bullish stock market, which is not what I would define as today. So if there's something skewed with the market, you get several different ways of checking something. What is the PPS indicator is in a sell mode. There's no volume upticking. In fact, the ATR is actually declining, which means it was a calm day. This is so either something's going to happen maybe tomorrow or overnight, or whatever, people did not believe in this market selling off. Otherwise, we would have had maybe a newer high in volatility, volume would have come up, and you would have seen maybe an uptick in the ATR. That's why I use these indicators and what they mean. So let's say, well, John, I don't have your indicators, but can I do this? Sure. There's your VIX. You can do a 10-day ATR, and you have on balance volume, and just maybe put up two charts, a 60-minute and a daily to confirm. And that's why in our live trading room, we have the VIX up. And I believe even today, if I'm not mistaken, I actually pointed that out, that look, here's today's high in the volatility, the VXX. When the stock market makes a new low, the volatility should be making a new high. It was in a complete, utter, distorted, skewed mode. So that was kind of weird for me, bottom line. So the indicators, just to let you know, we point those out and how we use them basically on a daily basis. All right. So I think besides now learning from David, I'm Every Woman was sung by Whitney Houston, just to let you know that we always learn something new every day. And I hope that maybe today with thanks to the question that we had about the TSI, looking at the relationships of certain markets, the radar screen, how the person's user group, and how these indicators kind of gel together. By the way, I think it is it's a very sophisticated market. It's a very this is a really strange environment we're in. The end of maybe the beginning of the end of the pandemic, which means maybe the end of stimulus, right? Also, it's the end of the Federal Reserve's run of having so much liquidity, even though they're going to taper the amount of money that bond purchase and the assets that they're still going to be doing into next year is insanity. Is the inflation transitory? Is taxes, are they going up? These are the two main things that I think are detrimental to the market, is obviously raising corporate taxes, raising capital gains tax, right? I mean, and here's the irony. Who wants their taxes up? You got the Secretary of Treasury, Janet Yellen. I mean, she's worth a few mil, and she's in the market. Jerome Powell, we know he's trading in the market. He's got municipal bonds. I loved his spiel. Oh, I have muni bonds. I couldn't sell those out. Yes, you could. You would have taken a tax hit, and you'd have to pay for your capital gains on it, or you could have rolled it over and deferred it, but he didn't. So anyway, he had mentioned that he too had a trade on, that the Fed was buying. So he, it pays to be in the right spot. What's the point that I'm trying to make? The point is if the market is going to crash, even all of these guys are in the market. So I don't think they want the market to crash in that content. Both Janet Yellen and, again, Jay Powell. Personal wealth would be evaporated. So, I mean, selfishly, I think they selfishly have ulterior motives to keep things propped up for a little while, right? That would be my conspiracy theorist thought process. Other than that, gang, I don't think we've covered a few questions. We got the most important one out. Trev, I'll try to help you on a one-to-one. Send it through to email, and we'll come up with the solution of what pink zero column is. Okay. Thank you all for joining me today. And if there's no other questions, we'll conclude tonight's session. And I'll see everybody in the live trading room tomorrow. Thank you guys very much. More importantly, I hope we have I don't think we're going to have anything other than a firecracker fourth quarter. That's for sure. There's a lot of things to sink our teeth into. So thank you all very much for attending and your questions and your participation. It means a lot. Thank you, guys. Thank you, ladies and gentlemen, and Bonnie as well. Thank you, guys, ladies and gentlemen. That's what that meant. Frankie C. Thank you, sir. Oh, it's not Frankie. It's just Frank C. Sorry. I hope everyone liked that, got a kick out of that, the volatility, that spike and that hammer. Irony is that, by the way, if you look at today, I mean, I don't know how we'll open tomorrow morning. I mean, S&Ps are already down thanks to, I think it was Bullard that made a comment, and that would cause the final, in the final minutes of the erosion of the market down 22 today in the ES was, I think Bullard was talking on CNBC, about tapering, and maybe they just paralleled the market down. We've got earnings out, banks are coming out, and, it's Fastenal did make a comment about higher costs. And I don't think anyone with half a brain that's putting gas in their car or going to the grocery store. I wanted to give credit, by the way. One of the stocks that we have is a seasonal play. It's also we're probably a little early on it, but Bonnie's husband, Joe, said we came up with a trade in Hormel, by the way. And if you're looking at Hormel's right here on the screen. And, without even thinking about it, this was a green line. That was a swing high. It was a resistance level. If we take it out, we saw, look at the on-balance volume surge. Look at the relative strength starting to see improvement. And then finally, what did it do? It started to take off. Now, if we change that up to the person's user group, which I'd like to cover real quick, and then make Joe give him his due props. Oh, no. Wrong trade station. Don't open up 9.5 person, you moron. All right. Let's get to the PUG radar screen and let's put it HRL just briefly. Now you can clearly see on the radar screen, or not on the radar screen, but you can clearly see the relative strength hasn't turned bright green yet, but by tomorrow it will. So tonight it's going to be, it finally turned bright green after today. That's a huge, that's now showing that the relative strength is it's not a one-day wonder. It's been multiple days that the relative strength's outperforming the S&P 500, and it's doing so on solid trend volume. When we came up with this trade, Joe said, hey, John, possibly people, because of the high cost of fresh produce and fresh food, if you go to feeding a family and you look at the cost of hamburger or chicken or any poultry, cuts, and you're trying to feed a family and you're on a tight budget, it might be less expensive to buy canned product like a Hormel, a Spam, or what I always joke and say, it's college guys' best meal. A six-pack of Olympia beer with a can of Hormel chili and premium crackers. That was a huge, that's just to die for. That's a great college. Now, that's back in a long time ago. I'm not saying nowadays. Now they have Uber and DoorDash, and they can eat anything they want. But back in the old days, that would be a good thing. But I do think the concept that what Joe had brought to our attention was, that could be something that might be a driver for this market. Anyway, Hormel, it was a trade that started to show up on our scans, and I just thought I'd share with you that 2 cents. And it's also relevant to today's topic about the PMC, the radar screen. And if we go up to consumer staples, or down in this case, staples should be down. Here we go. Consumer staples, I'll do it alphabetically. So Hormel's right there. Bingo. Relative strength is bright blue, green. It's in a PPS person's pivot study is showing a higher pivot analysis, kind of like what I was talking about with Facebook. This is what we want to see. If the market's truly bearish, think of this. If a market's truly bearish, price stays below the pivot. When the market starts to change, you start to see prices trade back above pivot, and the pivot gives you on the end of the day, it'll show you that it's giving a projection of higher resistance and higher support, and the market stays north of the pivot. That's all a very positive thing. So if markets are truly bullish, generally they stay above pivots on bullish days. So in the case of Facebook, this is what we're looking for, price to get above pivot. That's what I was referring to, looking for a pivot flip, looking for the pivot point to flip from bearish to bullish. And that's this daily trend right there. That's what we would see on the daily trend, which, by the way, here's Hormel, and it's up. So the daily pivot's bullish. And and by the way, if it closes here or higher on Friday, it's going to generate a weekly buy. And more importantly, it's trading now greater than its monthly open. So it opened, traded lower, and it's now has a 67% probability that the low for the month is in on Hormel. Everyone, I hope that pretty much sends it all together and puts the whole package together, and hopefully that gives you food for thought for the month, and you could revisit this video. Have a great evening. That concludes our time together. Trev says it's better. Oh, come on, Trev. It's good stuff, man. A little with the premium crackers. You guys are a rough crowd. All right. High-end clients I have. No longer would you eat canned Hormel chili. Wow. All right. I don't know what the sodium content is, but anyway, there it is. Have a great evening, everyone. Thanks for joining me today.